Hello everyone, welcome to the Stock Brains Academy YouTube channel, and in our first video on YouTube today we are going to talk about one indicator which is used by many day traders, swing traders as well as by institutional traders in order to find their entries and exits for the trades in the financial markets. And without wasting any time, that indicator is known as the pivot point. So what are pivot points? Well, pivot points are nothing but they are support and resistance lines which are calculated based on the historical price data and plotted on the chart. For example, if you take a weekly pivot point, then the price of the weekly pivot point is calculated based on the previous week's support and resistance lines and plotted on the current weekly chart. Now the same applies to the daily pivot point and monthly pivot point. But why are pivot points used by many institutional traders too? Are they really that useful? Well, actually yes, they provide a high accuracy in determining the price of an asset and its future prices probably. So why are institutional traders using pivot points? Because they are support and resistance lines, meaning support and resistance lines are area where the price of an asset can change its trend. For example, if you take BankNifty, let's just say that BankNifty has been going down in the downtrend for past 1 week, which is bearish trend. And when the price of BankNifty reaches a support level in the pivot point, then it is more likely that the buyers are about to step in and change the trend of BankNifty from a bearish trend to a bullish trend, which means that the BankNifty price has reached a support level in the pivot point. Then there can be many buy orders from the buyers and push the price of BankNifty from a bearish trend to a bullish trend. Now this is not always the case, but it happens most of the times. This is why pivot points are really useful in determining the trend or change in trend of an asset. And going on to the second slide, there are two types of entries using pivot point. The number one is the bounce entry and number two is the breakout entry. Talking about the first type of entry, which is the bounce entry, which is when you enter on a trade when the price of an asset touches a pivot point and bounces or moves away from it. For example, when the price of BankNifty is in a downtrend and it has touched a support level in the pivot point and the price of BankNifty is moving away from the support pivot point, which means the price of BankNifty has bounced back in from down to up, then it is more likely that the trend is about to change from a bearish trend to a bullish trend. Henceforth, buyers do place a buy order from there. And second type is the breakout entry. Breakout entry is nothing but you have to wait when the candle closes above or below the pivot point. For example, let's just say that BankNifty has been going in uptrend, for example, and when the price of BankNifty reaches a resistance level in the pivot point, you may think that price of BankNifty may be about to go down from a bullish trend to a bearish trend. That may be your thought in your mind, but when the price of BankNifty or the candle closes above the resistance level, resistance pivot point, then it is more likely that the trend has not changed and henceforth the bullish trend is about to continue. Now this is the breakout entry. For breakout entry, you need to wait until the candle closes completely above or below the pivot level. Now we are going to see all this in a chart. Let's just go to the chart now. Now I am in the trading view chart. As you can see in the trading view chart, we haven't have any pivot point yet. But before moving on to the practical view in the pivot point, let me just give you a clear example of trends first. So a market is said to be in an uptrend when the price of an asset creates a higher highs and higher lows. For example, now we are, as you can see on the screen right side, we are in BankNifty futures June 2022. So in the full screen mode, let's just say for example BankNifty has been making a high and then a higher low and then a higher high and then a higher low and then a higher high and then a higher low and then a higher high. This is said to be an uptrend. Why? Because the price of BankNifty is closing above the previous high, which means the BankNifty first created a high and then it created a low. But then what happened? The price of BankNifty again came up and it closed above the previous high. This previous high here has been taken out. So which means that the price of BankNifty is still in an uptrend. And the price of BankNifty created a new lower low, which means the low didn't break the previous low. Henceforth, the BankNifty is still continued to be in an uptrend. Now, one I mean when the price of Bank Nifty is in a downtrend, when this applies for everything guys, so it's not just for Bank Nifty. The price of an asset is said to be in a downtrend when a price creates a low and then a lower high and then a lower low and then a lower high and then a lower low. Now this is when the price of an asset is said to be in a downtrend, because the price of an asset has created a downtrend. I mean the price of a Bank Nifty has created a low and then a high and then a lower low and then a lower high, but this lower high, it didn't close above the previous high, so henceforth Bank Nifty is still in a downtrend. Now this is just an example. Now apart from uptrend and downtrend, there is one more thing, which is ranging market or consolidation. Ranging market or consolidation is when the market is said to be in no trend, which means it is not either in an uptrend or a downtrend, no clear trend. A ranging market looks something like this: no clear highs and no low clear lows too. So which means the market keeps moving around in a particular area like this, which we just drew here. This is a ranging market. This is what ranging markets are. Now most people actually don't trade in ranging markets because they clearly don't know what is about to happen to the price next. So moving on, now we are going to move directly into the candlestick. Let me just delete it first. Alright, so moving on here, we are into the price chart now, the real price chart of Bank Nifty and futures 2022. Now I am opening here the pivot points, traditional pivot points. So these lines which are plotted on the chart, they are called pivot points. Now pivot points have many lines. Now you can see these letterings like S2, S3, S1. All these depict the support lines. The letter S essentially means that this line is a support line. Now this one is the support line 1 and this line is the support line 2 here, which is S2, and S3 is the support line 3. And moving above, you can see that this is the R1, R2 and R3, which means that resistance 1, R is the letter R denotes resistance. So this is the first resistance line, and R2 is the second resistance line, and R3 is the third resistance line. Now going into the settings of pivot point, now guys, you can just type pivot points in TradingView's indicator, and the first one comes as pivot point standard. Just click on it, then this pivot point will be plotted on your chart. Now what do we need here is that we have S1 here, S2 here. Let's just leave settings the same except for this letter P. This letter P needs to be in a different color. For example, either take blue, but blue isn't visible, so I have kept in a yellow color. Let's just leave yellow color. I hope it's visible clearly for you. Or let me just change it, just a minute, sorry for the interruption. Let me just change it to the white, or let's just keep it in blue guys. Let's just keep it in blue. Sorry for the interruption. So what is this P here? Well, this P, it actually denotes as both support and resistance, which means that this P is actually the most important line in pivot points compared to the S1, S2, S3 and R1, R2, R3. When the price of an asset reaches this P, which this P is known as central pivot. When the price of an asset reaches a central pivot, then it is more likely than not for the price to reverse. Of course, it may happen even in the S1, S2 and S3, but when the central pivot point is more powerful than the other pivot point, this line here acts as both support and resistance. This line acts as both support and resistance. For example, just look at this. You can see that the price of Bank Nifty has been coming down like this. For example, a low and then a low high and then a lower low and then a lower high. And when the price of Bank Nifty reaches here, you can expect the trend to change from a bearish trend to a bullish trend. You can expect the price of Bank Nifty to go from a bearish trend to a bullish trend. It may start creating a high and then a higher low and then a higher high and then a higher low and then a higher high. Now this may happen most of the time, but not all the time. This is why central pivot points are far more important than other pivot points. That's why we have denoted it in a blue color. Now you may use any color you want. As you can see here, this price of Bank Nifty came down till here. It took support at the central pivot point, but unfortunately it didn't reverse much far. Instead it came down, it created a small high and then it started creating its lower lows, which means downtrend. And suddenly when the price of Bank Nifty had reached this level, support level 3, the prices of Bank Nifty suddenly started to create a high and then a higher low here and then a higher high and then a higher low and then a higher high. This happened for a short period of time. But let me just show you how many points or pips it gave you. Starting from here 6th June to ending here at same day 6th June, it actually gave you 367 points. Now if you have traded this, of course, if you identified this trend, you may have been in a decent profit. Now when the price of Bank Nifty had opened on 7th June below the support level, you can see that the prices of Bank Nifty took a major rejection here. First, when the market had opened at 7th June, you can see that the buyers started pushing the price up. But when the sellers started saying no, I don't think buyers should take control, henceforth the sellers started selling and the buyers started diminishing, and it started creating a huge big rejection from here. Again it went into a small ranging market and it started to create a high and then a higher low and then a higher high. But when the price of Bank Nifty reached this support level 1, support levels can also be termed as resistance level. For example, guys, let me just show you before this. For example, this price of a market has been going up, a high and then a higher low and then a higher high and then a higher low and then a higher high and then a higher low and then a higher high. You can see, guys, what happens here is that previous resistance points, what are resistance points? The price of an asset must come down from a certain point, that is known as resistance point. For example, you take this line here, just a minute, yeah, this line here, the price of an asset had started resisting here. The seller said no, I want to sell, and they started pushing this market down from here, and then the buyer started saying no, I want to push this market up higher. Henceforth the buyer started pushing this prices high and it broke past this previous resistance level. Does that mean that the resistance level is not useful anymore? No, that resistance level can still act as a support level. Now this is known as interchanging support and resistance. It even occurs in pivot points, of course. When the price of an asset breaks past above a previous resistance level and starts creating a higher highs, you can expect the price of a Bank Nifty or any other asset to come below to the previous resistance level here, and which may in turn act as support for pushing the prices higher. You can see, guys, the price of Bank Nifty pushed above the previous resistance level and the price again came below to the previous resistance level here on the circle, and the buyer started taking control again. The resistance can act as support after breaking out, and the support can act as resistance after breaking out. Now this is one more important term which you all need to know. Now the same case applies to pivot point. You see, now this is why, in order not to confuse you, I have created this. For example, when you see the support one, S1, S2, S3, you may think that okay, S1, which means it should act only as a support, or R1, it should act only as a resistance. No, S1 can even act, the supporting pivot point can even act as a support and even the resistance, both. It can act as anything, and even the resistance can act as a support sometimes. This is known as interchanging support and resistance in the trending market. You see, the price of Bank Nifty opened below here from the circle. It opened below the previous support line, and what happened? The buyers have started to push above, but what happened? The sellers started taking control from the S1. Now this S1 has turned into R1, which means resistance. This S1 has turned into resistance, so the sellers started taking control here. You can see that the sellers started taking control. Now what happened when the price of, you see the price as bouncing away from here. This is the first type of entry. The price has bounced away from this pivot point. You can start taking entry on the second candle. You can either place your stop loss above or the previous high here. The previous high means you can take it at the previous swing high. I am talking about the previous high, as you all know it, this previous swing high, for example, but it may give you a huge stop loss. So instead, for just for the namesake example, I am keeping the stop loss at here, and I am targeting, where do I take my targets, my profits? I am targeting at the S2, which is the next pivot level. You see, when the market opened, I saw the sellers getting in control of the market from the resistance, from the support turn resistance. Henceforth you can take a sell trade here, and it actually hit the target without much problems. It actually hit the target and you booked a profit of 184 points in Bank Nifty. Now this is in a historic price chart. It may be easy to tell, and even while trading, of course, it is far more easy for a pivot point. I mean, it is far more easy for you guys to use a pivot point than any other. This is actually like a ready-made support and resistance lines for you guys. There is not much complicated stuff. Only thing you need to know is that support can act either as a support, but when the price of an asset breaks and closes below a support level, then it is more likely that the support can even act as resistance, and the vice versa same applies to resistance. When the price of an asset breaks above a resistance and closes above it, you can expect the price to come down to the previous resistance level, which in turn may act as a support level. So this is the only thing which you need to know when you're either even practicing support and resistance trading or even by pivot points. Now of course, pivot points are support and resistance levels. You can't argue with it anymore. Pivot points are support and resistance levels. Now you can see we are in the replay mode. Here you can see that the sellers have started pushing down till the support one, but the buyers had said no, I want to take control of the market. Henceforth the buyers had pushed the price higher in an aggressive way. It started creating a doji candle. Actually this is not a real doji, but in fact it is like a doji. So what happened? The price of asset, as you know, it started creating highs. For example, if you had taken a trade here, you may place your stop loss at the wick here and your targets at the next resistance level R1. You're risking 174 points for a target of 174 points. This is a fair trade. Now the stop loss may be higher, but I mean, come on. I do have I will be having other videos on how to take risk management, so of course you need to subscribe and like this channel for it, by the way. And as you can see, the prices have started rising above it. So let's just check when the prices took resistance here. Well, now look at this. Now look at this, guys. Whoops, sorry. Now just look at this. Now we have taken a buy trade and we have closed a position at the next resistance level. Now you can see that the sellers, when the price of Bank Nifty reached 35,461, which essentially is the R2, what happened here? The seller said no, this price is too high for me to buy, I need to take control of the market. So the sellers started pushing the market down. You can see first the sellers took control nicely. Number one, they started creating a low and then a low high, but they failed to create another lower low. Let's just wait, because the price didn't even break above the previous high, or nor did it break the previous low here. So this is like it's technically still in an uptrend, but this is chances are that the prices are, the trend is more likely to change. From here, the buyers again pushed above till the R2. From there, what happened? Let's just see. The sellers again started to take control of the market. Now this is why, guys, I'm saying, you see the importance of pivot points. Henceforth, if you actually master pivot points, you can make a reasonable amount of profits. Now actually we are seeing this in replay mode in Bank Nifty or any other stock which you may use. First, I would advise you guys to backtest it. Backtesting means now we are in trading views replay mode. You can use backtest it. Take 100 trades, for example, tutorial trades, not in real time market. Just take it like this, how we've done it here. Just test its accuracy first. Now of course, no strategy in this world is 100%, it works 100% of the time. No, it works, at least let's make sure that the strategy works 60 to 70% of the time. You're good. For example, let's just say that you made rupees 100 profit for the day in 10 trades, each trade rupees 10, for example, and then you made 100 rupees, but the first 6 trades are profit for you and the last 4 trades are a loss for you. What happens? Henceforth, you made 60 rupees profit, each trade 10 rupees. Let's just say, for example, you take a 10 trades, you might have got 100 rupees, but sadly you made 6 trades profit, which is 60% accuracy. So each trade 10 rupees, you made 60% profit. So henceforth you got 6 trades right, and last 4 trades are wrong, but still you are not in a loss because you are in 60% accuracy, which means that you are still in a profit. So technically what we are trying to say is that you need to make sure to find a strategy which will give you an edge over the market. and edge over other competitors in the market. No strategy works 100% of the time, but it is up to us to make sure that we stay consistent in our trading mechanism. So on moving on, you can see that the price of Bank Nifty has reached central pivot here. Now it is more likely that the price of Bank Nifty may start creating an uptrend, but let's just see, this may not be always the case, because you see it broke below the central pivot. It started to retest maybe, but it still didn't touch the central pivot again, but it started to retest and it came into a consolidation phase, and the market opened on gap down again on 9th June. Now I would advise you guys not to trade on the first 5 minutes of the market's opening, because you never know what the market may do. It may start creating a sudden uptrend or sudden downtrend. Let's just wait for the first 5 minutes. You see, the sellers tried to push below the S1, but what happened? The buyers suddenly started to take control maybe. Let's just check it. Now moving on, you can see that the buyers are struggling to take control. Actually, they are technically still in an uptrend, but still the buyers are struggling. When the sellers came here, the sellers tried to push it below this S1 to the S2, but what happened? The buyers started to take control. Instead, they created a high which broke all these previous high, and then created a low, and then they created a higher high, and then a lower low, and then somewhat of a consolidation here, and then a higher high, and then a low. But what happened? This low, it didn't break below this previous low, so technically we are still in an uptrend. But when we are in an uptrend, when we are said to be in an uptrend, when this price breaks and closes above this high, this is what is a condition which needs to be fulfilled in order for us to be in an uptrend. Are we still in an uptrend? Yes. Why? Because the price has closed above, and it started to move up again. Now this is it, guys. Now this is what I was talking about. You see what happened? The entire day was in an uptrend. From when? From 9th June to 9th June, the whole day was in an uptrend. But when the price of Bank Nifty reached this central pivot, this is what I was talking about. When the price of Bank Nifty reached this central pivot point, what happened is, you can see that the sellers started to take control. The buyers are trying to push the price up, but it is end of the market. You may expect the market to start opening on a gap up, or probably on the R1 the next day. But unfortunately, what happened? While the market was still in an uptrend, the sellers had suddenly taken control, and the market next day had opened in nearly a 400 points gap down. Actually, it's 448. Let me just say it. So it's 400 points gap down. This is the importance of central pivot. This is what I was talking about. This is why central pivot is very much important, and they actually help you in determining when the price of an asset is more likely to change its trend. So again, what happened? The sellers started rejecting this price from S1. The sellers wanted to take control, and the sellers actually took control for quite some time. But then what happened? Actually, the sellers still prevail, and yes, the sellers took control from the R1 from the S1 here. So this is what happens. This is why pivot points are far more important, and they actually help you in your trading. Now, why are pivot points actually? You can see pivot points are leading indicators. Now there are two types of indicators: lagging indicators and leading indicators. Lagging indicators, for example, are moving averages. Now moving averages, for example, they cross over or show a change in trend only when the price of an asset is far more higher. For example, when the market is in a downtrend, for example, let's just say that market is in a downtrend, you cannot expect the moving average to show immediately into a green color trend, I mean a uptrend, immediately when the market changes its trend from a bearish trend to a bullish trend. Why? Because moving average is a lagging indicator, but whereas pivot points are leading indicators. What do I mean by leading indicators? They are a step ahead, which means they help you in pinpointing price, how they are about to change or when they are about to change. This is why pivot points are called as leading indicators. So I guess this is enough for today. Thank you everyone for watching this video, and if you really like this video, please do subscribe to our channel, click on the bell icon for notifications, and do like our video. Thank you very much and hope you all are safe. Take care and goodbye.